Hello and welcome to our today's market report. It is Wednesday, the 17th of March 2021. Today it is a big day and all eyes are fixed to DC because today the Fed meeting is at 2 o'clock p.m. And Bank of America, for example, calls it one of the most critical events for the Fed in some time. And yeah, sure, because Jerome Powell has no less job than to encourage investors to continue to trust his policies. And this will be a difficult task today. So, but please first have a look at our disclaimer. Today the pic is a little bit small because I took it out of our blog on the website. So investing involves risk, including possible loss of principal, and the content is for informational and educational purpose only and should not be construed as an investment advice. So, but now I will go to the live market, and we have a look at the now at the Dow Jones chart, and you saw we go here in the technical analyze, and it looks like that I had here. You saw here this broadening channel over started here mid of November last year. So it broadened over the time, and now 2 days ago at the 12th of March, something happened and the chart went through this resistance line, this upper line of this channel. And now yesterday, yesterday and the day before, Monday, we had here these two bars outside this channel, and so I talked and I wrote it in the report. We had the second, the bar of yesterday was inner the bar of the day before. So we had at Monday we had a range of 398 points, a day range, and yesterday we had next 258 points. So I make it. Should you see it? I think it's a little bit. So I make it a little bit. So here here have it, and you see it's a little bit small. We had here a new high closed in the low, and so it could be, and it could still be a fake outbreak. It's not normal that a fake outbreak is going over 3 days, but you see here actually closed, open and closing on the same area. So no changing between yesterday's close and today's opening, or small change only. And if we now saw the situation, we can think about, okay, today is the Fed meeting, and the markets are preparing their undecided where to go from the direction. And all you also you see here it, we will see it in the S&P and the Nasdaq in a more detailed way. You have the opportunity that it will stay here over this this upper line of the channel, and will go up, will go sideways, or it is a fake, and so will go down. What is interesting here is that you have not other indicators like head shoulder combinations or such things which will show a more bearish direction, but we don't know. So we have to wait what today will happen after 2 o'clock this afternoon. So Um, in this slide, I think the Dow Jones, you see it's a more value-oriented stock market, stock index, and so you can think the impact of the now actual increasing treasury yields. The 10-year treasury are actually at 10.65, 10.66, I think, and so the midterm treasuries are increasing, and but the Dow Jones is one of the winner. You saw it as the sector rotation started out of tech a few weeks or next month ago, and the tech stocks are the losers of this game with the treasury yields. The Dow Jones not so, because in the Dow Jones are more value stocks, and finance stocks and value and finance are the winners in increasing fear of inflation. And so actually, I think the Dow Jones has priced the last week's silence of the Fed in point of the inflation. You remember, Jay Powell is the last one, or one of the last chairmans or chairwomen of leaders of central banks. Christine Lagarde, the head of the European central bank, told the media and told that they will have it in view, will have a look at this yields. They are recognizing them, and they will check it and have a look at them. And also Jay Yellen also told the press a few days or weeks ago, yes, sure, the Treasury Secretary has a focus on this rising yields, and so Jay Powell didn't say anything in this manner, and so you see it here, very small candles, but still in a possible upwards trend. We had here this bottom hit, the second bottom hit, and so 3 days ago trading over the upper line. So the Dow Jones will be the winner if Jay Powell will say nothing, but it won't be the loser if Jay Powell will announce, for example, buying of 10-year treasuries at the end of the running time. And so we will have a look what the market looks like. But here in the Dow Jones, I think it could really go in this way, possible wise, because if you now I do this a little bit away. When you see here now, we're totally looking like these bars use this upper line as a support, not that it changed, because when you now see at Friday, at Monday, Tuesday, today, so yeah, it's possible that we will get here another way upwards trend. But we now go to the S&P, and the S&P is a broader market, and there you see here you see here the charts and all the possibilities. So, and here in the S&P now we have more indicators that there could be a change, and you see the 2 days the 2 days candle. So we had here two candles also in the inner. The yesterday's candle is from the range inner the candle of Monday, so you always have here a sign, an indicator for changing direction. You had a non-changing between Monday and yesterday. Yesterday closed next to the opening, and now far away, went down. So today it could really look like that he will continue to forming this third triangle. You have here the first, the second, you have here the shoulder, the head, and possible wise you will get here in a few days the next shoulder, and then it should be very clear that the range will go down. We have here in the we are running in the S&P in this broadening channel for now even also November last year, now about 4 months. So we had good numbers all the time, but now it's more going sideways the months, and now here you have this building up this this pattern here. So we have here in the S&P, it's not a problem, but it's you see it here is lots of opportunities where the direction will go. We will talk about it. So now we have at the moment we have the situation we are inner this channel, so we have no resistance support lines, and perhaps I should take a paid version. So we have here the $4,000 resistance. Of course, it's a very psychological factor, psychological number. So, but we are now here, and it's. I think it will today or tomorrow. There will be a little bit clearer, or end of the week, where the direction will go, because we have now the chance that the S&P will grow in a further way up to the upper line of the channel, and this could work as a resistance, and then the decrease, the value decrease. So here are the downline of the of this channel. It's possible that it will get a rebounds and go back high. It's also possible that it go high, goes down and breaks through the support. It's possible that goes the next day to the support and bounce back high, or goes down, goes through high, or goes high to this upper line and then rebounds downwards. So we have different opportunities. You see here in the S&P, it's a not clear situation. I think we will continue to form this shoulder head shoulder pattern, and will go here to this support at our, I think 3,800 will be a support, and that will bounce back and go further high, because we have good numbers in economy. The S&P is a very broad index with many important companies in it, and all you see, the economy in US is growing, is not more recovery, it's really growing, and so I think it won't change into a bear market. I think it will more a bullish market. I think it will go in this up and down way, but otherwise the channel will be broadening. But I think up to end of April. We will stay in this channel, but perhaps I'm not a man with a glass bowl, and so I don't know. I think only. So, and now I don't want that I overwhelm you, but we have now to look into the Nasdaq, and the Nasdaq offers more and more. So I'll go a little bit, make it smaller. So don't be confused. Yes, it's very interesting, this Nasdaq chart, because the Nasdaq is that chart which was or is impacted as the most now as the 10-year Treasury yields are rising, and because you all know Nasdaq is the tech. Our tech index, and so the tech industry, or the tech stocks, not the industry, the tech stocks are impacted the most as inflation grows. So go out of the tech stocks into value stocks, and we saw this sector rotation now a few weeks ago, a few months ago it started, and now we are going further in this way, and now also the further rising yields in Treasury could be a problem, could be a bigger impact than up to today for the Nasdaq. And so I think the tech companies or the tech investors are listening in a more interested way to this what Jay Powell will talk today. But we will have a look now here at this short, not short. We will have a look at this chart now. So the first time we started here, also like in the S&P or in the Dow Jones, we started mid of November. This upwards trend with a broadening channel, and up to end February, 22nd of February, we were into this channel, and we left the channel then at the 23rd of February this year, and left this broadening channel. And with the leaving of this channel, it happened something interesting, because we created a next shoulder. So we have here a totally formatted shoulder head shoulder pattern. So, and we have here the neckline. Yeah, we have here the neckline of this pattern, of this shoulder pattern, and now it happened something. The last days with here this here it looked like you have here this harami combination. So but what happened here? It runs down at here we are 12 to 12, okay, and now bounced back. And but what happened? We went here to the neckline a little bit over, bounce back, go back. 1 day later, back to the neckline, and 1 day later we go over the neckline. So the neckline was a resistance which the first and the second and the third went through and go above. So what shows us this? This shows us at the moment it would, or it was a high percentage, it was a fake, because now today we are back. You see it here, this small red candle. So we are here back below the neckline, and so it looked like a fake, and it looked like it was a fake. But what could happen, or what was the follow-up if it wasn't a fake? So it went here out, and you saw here all the charts at the end of February stopped at this line, and there, so more closely at 30,300 something, 10, 14. Okay, so now it's very interesting. That's the closing of yesterday. So we are now here in we have here it is possible that we will get here a new resistance area, yeah, around this 13,300 and something else. So we can form, it's possible that it forms here a new resistance, and so we have also here many possibilities. The market will develop because it's the most influenced market, or by the Fed decision this afternoon, or by the talk about the treasury yields. So so at the moment it looks like we will follow this red arrow. We had this, we went down, here rebound, here back up, tested one, tested the second, fake breakout, and now we're back here in the area, which we think it's the right area. So we tested this the third time, so we look, and I think we will follow this. Of course, it's possible that we will go through the neckline up here, and then it's possible that we have here a new resistance. It looks like we have here a new resistance area, and so we'll go a little bit up and then bounce back and go down. If today the Fed and Jerome Powell will talk about the situation, that it will do everything, that it will do really everything to stop this increasing of the treasury yields, I think then there is a possibility that we follow this green arrow, but I think it will more this red one. So for a short review of all, I think we are in the Dow Jones and still in a bullish market. I think we will continue this bullish trend over the time, because the Dow Jones is less influenced than in comparison to the Nasdaq of the Fed decision today. We have here more value, but we have also a part of tech, so it will balance it. So I think we will stay here in a further bullish situation. I think the smart candles is also only the waiting. This for today's decision. And also I think in the S&P it's a little bit more unclear here. You saw the we're here in this channel, and so I think it will continue this triangle, so that we have the head shoulder pattern, but I don't know. We will see. Actually, it looks like. So and we talked the Nasdaq, the most influenced indice today, and we will wait what happened. But if you see here, it's very hard to see. I will throw away this arrow and throw away this. I have it as pick, so I can delete it. So you see here, this is the today's bar. So we are here holding this this resistance. I think so. So then I say thanks a lot for watching. It was pleasure. Now you only see this blank screen. I stopped I stopped too fast. So this is the report. There you have more detailed information. You have here the yield curve of the 10-year treasuries. There's written down, it's written down what I talked about, and this is the important thing. Please read our disclaimer very carefully. Investing involves risk, including the possible loss of your principal. And the creator of this content, this is me. I have a position in this mentioned securities. This is here at the Dow Jones. We are trading with Aegidion Capital Dow Jones derivatives. So that's right. And this content is only for informational and educational purpose only. So then I say again, thanks for watching for this short technical analysis of the market. I hope you enjoyed it, and we will see. I will see you again in one of our next videos. Thanks a lot. Bye bye.